Welcome to Java. Thank you kindly for joining me. It's June 30th, 2025. It's Monday, so I hope everyone had a wonderful weekend. I want to thank everybody for supporting this channel. It's getting a little bit of growth, and I just have all of you to thank for that. So with this, we're looking at a short week this week. 4th of July holiday on Friday. We've got Canada up in front in the center. We'll also speak a little bit about green energy and power taking a bit of a hit, as well as gold moving forward. So let's get started with what's going on in the markets. Fear greed meter, strongly greed territory. This looks to continue this morning. So we've got the United States stock market in the green. We've also got the futures in agreement. Now, this is not very strong. It's not significant, but they are showing favor to continue in this bullish trend, at least for the day. We've got the odd part, gold also going up, gold, silver, and cryptocurrency, and the 10-year yield coming down slightly. Now, this is all with the dollar still taking more of a hit, becoming even weaker, particularly against the euro. So this is relative strength. It is actually much weaker than what this is showing. So with the weaker dollar, we could expect higher prices in the stock market. But we're watching still a bit of an anomaly. So we're green until it's not. Futures a little bit distorted. Now I'm talking about with the bond market. We've got some problems here. The bond market, the yields are coming down. This means that money is going into the bond market. That normally does not happen at the same time. It is going into the stock market. So the yields are coming down slightly. They're the lowest they've been in some time, and relative strength of the dollar low. So there's a bit of divergence here in what we're seeing that should go on. Now, we've got the markets green. This is partially because Canada said they're going to rescind what they call a revenge tax, the digital services tax, because they want to start trade talks. So that's positive for the markets. We've got this currency divergence that I'm talking about, massive strength of the euro versus the US dollar. Now, to be fair, I still do not think the euro is going to become a reserve currency. It just doesn't have the backing. Now, strengthening versus the US dollar, absolutely. It's risen quite a bit. Now, they're going to cut rates again. If they do, that's going to weaken the euro. Now, this is if the US cuts their rates, it weakens their currencies. We're in this race to the bottom of the value of the currency. Now, this bond market, I want to talk about it just a bit, because this is what we're really watching for the underpinning of the stock market. There is massive imbalance and instability at this moment. And what am I talking about? All of the bonds, including the euro, German bonds, Japanese bonds, are all in the same state at the moment. So what this means, a lot of money flowing into the bond market. Now, the interesting part is we've got a bond rate catch 22. Now, if we've got high yields on this, it means bond prices are low, money going into the stock market staying green. If that rate stays high, the debt is impossible to service. Now, on the other side, the catch 22 of this is if there is forced purchasing or they force that rate down, what that means is foreign buyers will sell off the bonds, and that will thus again cause some issues with this rate because no one wants to hold loans if they're not performing, except perhaps banks if they can loan at a higher rate. But these bond rates coming down are causing a problem with foreign investors. That, in essence, is going to crush the dollar even more. So, causing a problem. I want to talk about Japan a little bit. They've got a serious problem with their inflation. They're rushing to the trade table to see if they can take action. I'll talk a little bit more about them. And right now, there is serious unrest going on in Serbia, if you are unaware. Now, Russia is jumping in to say that they hope the West does not continue their of late, I've been speaking about the color revolution. If you do not know what those are, you can look it up. But in essence, it is reforming other governments, causing instability, and putting in place those that the United States or Western world would want in power. So back to the markets and the calendar. Getting PMI this morning, but really this is not going to be the mover, I don't expect, unless it's way off in the numbers. What we're looking at is going to be the JOLTS or job openings tomorrow morning, 10 a.m. That is going to be the mover for the week. So after that, also employment again, more employment. These are going to be the movers as far as the Fed and whether they can cut and servicing the real economy. Now, jobs are dropping. So I think they're going to hit a point where they drop faster than they can manage them. So looking towards that. And then on Thursday, getting PMI services again, uh, more data coming in. And the 4th of July is Friday. So the United States markets will be closed. So Thursday going to have a tapering off, probably sell off into the end of the day again. But we'll cover that then. Now we've got a lot to cover here. We've got measures to ease inflation must be speedy. And this is coming out of Japan's Ishiba saying this. So this could be critical because if their inflation does get out of hand, what they're going to want to do is hike rates and then also sell off the treasuries that they've got, possibly as a measure that could hit United States markets. Now, the green energy, EU um, and green energy firms hit because what happened was the wind and solar tax breaks are expiring. They're not extending them. So we're watching a heavy sell off in these sectors. Now, they have somehow finally figured out, and JP Morgan is saying that weaker jobs numbers, meaning more people losing their jobs, might limit equities upside. In other words, people don't tend to put their money into stocks if they don't have jobs. So I think that's kind of a given, but they figured that out. Okay, so market minutes. We've got some litigation and tariffs, all kinds of things happening with Boeing Airlines. Some more kind of negativity coming out for that. So watching that stock. We've got United States credit card debt hit 1.18 trillion. Now this is a significant increase this year alone. So this is showing kind of the middle class true state of the economy. It's kind of in a bubble and kind of been covered over with this paper, if you will. These are temporary loans. If you can look at them that way, and that is how people have been surviving. Now, going to NATO, this innovation fund that they've got, this started with the uh, in short, with the Russian war, basically, they started it 2022 with that invasion, and they are using a lot of Russia's money to invest. So they're investing more than $1 billion in technologies, and this is in order to enhance NATO's defenses. Now, what I want to point out is what this defense and what this company is that they're pouring so much money into. The company is called Portal Biotech. Now, it's a UK based company, and what they do use is protein sequencing. That sounds familiar, it's just like DNA sequencing, to detect engineered threats and defend against biological warfare. It is artificially intelligence backed technology with biological sensors that work on a molecular level. So, saying they could provide results within sites, and this is through NATO. So, this is, in short, another arm of doing the DNA, artificial intelligence doing the DNA sequencing through a UK company. So, couple of things there. First off, what they're doing. Secondly, this is funneling money through the UK, who is in a hot position at the moment, and they're trying to kind of cover over their weakness as far as country because they're not in with the euro any longer, but they cannot let them fall. If they do, all of the central banks would feel that shock. So After that, we've got US bank stocks are rising after Fed stress test results. Now, this is a bit ridiculous because what they've done is they're in short testing these banks, and now what they're doing, if they can't pass, they're handing them the answers in the first place. And if they all still don't do very well, they're changing the grading system, and that's what they just did. So all of the banks are in wonderful shape after they've changed this grading system, and they have cut their requirements to keep capital on hand or keep reserves. So now all of the banks are doing wonderfully. Their stocks, pretty much across the board, are up this morning. Goldman Sachs taking top position. So shifting now, Trump Media's Bitcoin Treasury deal now just got approved through the SEC for their filing. Now, the scandal in this is this ETF that they're trying to put through $2.3 billion. And it's not so much that or that it's Bitcoin, but rather that this is 50 investors. So we're talking about an ETF. It's extremely exclusive. And it is just a way to kind of publicly booster these 50 investors, quote unquote investors, within this. And we're pushing this, of course, towards to where they can hold the real assets and then sell off the ETF paper to all of those suckers that are pouring their money into the stock market. So we've got stable coins now becoming the default settlement layer. They are CBDCs. Going to prove this to you. You'll see it soon. Now we've got, along with all of this, banks lining up to embrace stablecoins. It's early, but financial institutions getting ready to issue the digital asset. They're all ready for it. They're all on Fed now. So this is rolling out. This is just that they're now allowing the public to know this. So stablecoins issued by banks, controlled by them. It is a central bank issued digital currency because that's who's going to control it. So now, paired with this, tokenization networks could transform the banking industry. So, tokenization of all assets and using stablecoins, put the two together, they're the CBDC. So, last thing I want to bring up, Bank of Korea, they were supposed to come out with CBDC project. They got a lot of pushback because it was called CBDC. So now instead, they're submitting a stablecoin bill. So, shock, shock, not really. All converting, it's heading towards the same thing. We know how to get around this. So, for those of you that are trading today, it's looking like a crane day, at least of the start. You have to watch the headline news and also keeping an eye on that 10-year yield. It's a little bit overcooked in this market at the moment, and anything could throw it, in particular, these trade talks. So, until I see you again, my friends, resist